Hello everyone, Nick Ryder here with Kathmere's Chart of the Month. Recently, at the Federal Reserve's annual gathering in Jackson Hole, the Fed's chair Jerome Powell gave his strongest signal yet that interest rate cuts are coming soon by saying, "The time has come for policy to adjust." Chairman Powell's comments came less as a surprise to the market, but rather a confirmation of what many had been anticipating for months, that the Fed was about to embark on a rate-cutting cycle now that inflation has significantly declined from multi-decade highs to within striking distance of the Fed's 2% target. With a rate cut now effectively a lock for the Fed's upcoming meeting in mid-September, in this month's Chart of the Month, we examine how the stock market has historically performed following the Fed's first rate cut of a new easing cycle. In the analysis presented on the slide, my team tracked the performance of the S&P 500 index during the 5 years following the Fed's first rate cut following a rate hiking cycle. Our analysis begins in the 1980s, which is when the Fed's focus gradually shifted towards its present-day approach whereby it targets a specified level for the Fed funds rate. In the bottom row of the table, we can see that on average, stocks have performed about average in the periods following the Fed's first rate cut. It's also worth noting that is often the case with these types of analyses. The average conceals a lot of variability around the average. Looking at a more granular level at the 9 periods captured in the analysis, we can see that there have been some periods following the first cut where the market has delivered historically above average returns, and others where performance has been below average and even negative. Overall, we don't view the Fed's pending rate cut to be inherently an either bullish or bearish signal for the stock market. Instead, we view it as just one of a multitude of factors influencing the market at any given time. History has taught us that the market's short-term movements are extremely difficult, if not impossible, to accurately predict with any amount of consistency. Accordingly, it's not terribly surprising to us that something as highly publicized and as widely followed as Fed monetary policy isn't of much value as a signal when attempting to forecast the near-term direction of the market. That's all for this time. Thanks for joining us, and we'll see you next time.